Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So today was a basically quiet day. A lot of back and forth action, a bit more weakness than strength. But based on the fact that we just had that big move last week, a little digestion yesterday, it was pretty much expected as the market's in somewhat of a holding pattern because no one's exactly sure what Big Ben's going to say tomorrow, if we're going to get any type of QE or if they're going to come out with the same language, and then people will start speculating for August. I think the real thing people are waiting for is like the ECB and what's going to go on. Are they actually going to do something in their announcement and fire some shots of the bazooka? And then jobs reports Friday. So with that said, we've been slowly digesting that move, and we closed near the lows of the day. So at this point, we need to see what levels we can look at tomorrow to figure out if there's some commitment up here where we could buy the dip. Yesterday we tweeted that there's really no edge in being long right here, no edge in picking a direction. And then today, you had the same type of scenario. So if you look, the 2-day move that we had after Draghi's comments, took us all the way up into the upper end of the range. So now at this particular point, you take a closer look. Digestion yesterday, we traded through the high here of 139.07, came back below it here, couldn't really even get back up to that spot. And then we closed near the low. So for me, I went home, I would flat, because at this spot, I think I can get a better entry. So the question is, where could that be, and will it be tomorrow? So, you could actually draw a few different types of resistance and some, the pullback here or some levels to watch. So if you just want to put up the Fibonacci retracements, you can go like this. You can go from the low here that was put, up until that little peak, which is right there. So we talk about, the retracement levels. This is just the 25% retracement. So from the bottom of this move up until that, all we've pulled back, and we're in still the top 25% of this range, which shows commitment, which shows that people are still involved. But it could be too quick for guys that are very active or tactical to be buying back. So I would think, if we push below this trend that we broke much further, I think that momentum guys are going to want to see this like 136.95 area hold, which would also, bring us right into the moving average, which would show, the dip buyable, which would be the top, not third, but close to the top third of the range. But really, the market's been testing everyone's patience each time, and it comes down to the 61.8. But at this point, let's see if there's anything different. If we start breaking below this 136.95, anyone who tried to stay with and roll up the shorts, they'll be able to salvage their trade a little bit. So that'll cause the speed to get a little slower. So with that said, you take a few different looks here. Okay, this one being the Fibonacci retracement of this last move. So that would bring you to 136.95-ish into the moving average. So if we had a gap down tomorrow, it'll be worth a look to buy. And then if we reverse and we get some market-friendly news, which I really don't even know what that is anymore, because bad news is sometimes good news is sometimes bad news, and whatever. So PS, these are the spots. And then if you want to take it this way, you take that off, and you want to do another more macro, all right, Fibonacci retracement from the lows that we put in, all the way back there in June. So if you look where we are now on a more macro sense, all right, 136.40 is the 25% retracement, and then you have right here 134.80, and then all of a sudden, we're back into this channel. So there are a lot of different ways to skin a cat. It all depends on your time frame. On a macro sense, I would think that this 134, if we're going to be doing the exact same thing we've been doing, where we come in and test this uptrend, it could pull all the way back to here, which would frustrate and keep us in the same type of range that we've been in, and still be okay to continue. I think if there's, just say any kind of pent-up momentum to keep the market in vogue for August, so to speak, I would think that this is your area. Anything below this area right here would get me back to like neutral to negative, or neutral, versus up here, you're a little bit more neutral to positive. But again, every time we've come up and you try and measure it, and we've been failing at each end of the range. So you want to make sure that if you think this time is different, let the market show you that this time is different. And this time being different would be as if we do pull in, we pause halfway. Because if you look here, We went to the high end of the range, to the low end of the range, to the high end of the range, to the low end of the range. Broke above, this high here, but didn't go to the high end of the range. Then we came back, broke a little bit below here, got everyone really bearish before Draghi's comments, and then now we're back at the high end of the range. So in order to really have better action with some momentum, because we're not finding much momentum, we come in and we hold this area. We don't come all the way back down to the low end of the channel, because that would definitely drive a lot of people batty. And at this particular moment, there's a lot of people out there that are feeling a little batty, and frustrated, because again, we are momentum traders. We like to buy high, sell higher. We like tight patterns and pivots. We don't like selling them when they look their best and buying them when they look their worst. It's just not the way we're trained to trade. So you have to change a little bit. So up here, we don't hold these upper levels. We still have a long summer to go, and I'm sure there will be better time, in front of us, a better trading environment come the fall. So with that said, there's still some stocks hanging out there, and there's still some moves out there that are tradable. And we talked about earnings in Apple, and a lot of guys got out of the way because we thought maybe it wouldn't be a great report, and we went down 30 points. But if you're a macro investor, did you take advantage of that 30-point down move? Because we also said the highs of the year was not in. So a few different ways to play it. You bought the dip, just saying, okay, I don't get this opportunity often, or you said, I'm going to wait as a trader. There's an inside range, below 570, I'm short, above 580, 80, I'm a buyer. And if you take a look at Apple, you will see it had an unbelievable move, okay? You didn't have to be in there for earnings. All you had to do is wait for this lower range to work itself out. When it crossed above this 580, 80, pow, nice move. And then, I would say most active traders took their trade, okay, after the second day, because you thought maybe to get some sideways, not thinking that there'd be a report that Apple could split their stock 10 for 1 or 5 for 1 and get added to the Dow, and now we're right back to this range. So for me, I really would love to see some type of sideways consolidation in this top third of the range, some type of holding up here to absorb this recent move. And then the next trade would be, for the momentum intermediate trader to buy as it crosses above this, 614 to 615 area, for then a move to get to 620 and then even higher. If you think that, I would say, again, I think I said this analogy yesterday. I said there was a 75% chance, because everyone likes when I say that the highs of Apple are not in the year. And I also said the 75% chance the highs of Google are not in. So if you have an account that you could just buy and hold it and keep it on the side, and that's part of your investing thesis, then do it. Because if they do announce some kind of split after hours or or before hours, it's going to be hard to get and hard to buy, so you're going to want to own some. But after a move of 30 points in the past 3 days, if you're not in it and you have to get in it, you might have to deal with some packing and filling and a little bit of sideways action, which again, if you're an investor in Apple, it shouldn't be a problem. If you're a professional trader, you might want to be a little bit more perfect. But sometimes trying to be perfect doesn't work. So anyway, you look at Apple right now, this macro pattern looks really, really good. And some sideways action right here would really make me happy. And then a buy above this area, and then I think you just close your eyes and we hit the highs here and continue. I think you need to get the confirmation also that the iPhone 5, they talked about unveiling it September 12th. Does that mean it's on sale? Does that mean it's being shipped? Or does that mean they're unveiling it for October? So a little concerns out there that maybe that people are jumping the gun, and that's why you shouldn't be all in here. But if you're a macro investor in stocks, you should be holding Apple. As far as Google's concerned, still acting very good. We talked about the change in composure since earnings. So if you didn't take it into earnings, because look what happened the last time and look what happened this time, you could have been a buyer as it held the 600 level or when it went above 618. And now if you look here, it's going sideways, okay? Flagging. So I'd say the longer it holds above, even just say it could even get to 618, the higher the probability that it winds up breaking this downtrend. And then if you go again to your weekly chart, you will see that it looks ready to go and make new highs. Here is, 670. You go to your monthly chart even, and there's really no reason why above this area now, which is 670, that at some point in this fourth quarter, you don't get a move to retest the highs that was put in back in 07, which was 747. And this was pretty much the reason why I loved it in the beginning of the year, because it looked like it was going to break out above this. It just needed more time, never fell apart, still making low, higher low, higher low, higher low. So if you're a fund or you're an investor with a long-term time horizon, this Google seems poised. As far as Amazon, I think it's still okay. I don't like that model as much, but as long as it stays above 230, 228, I think it's in the game. It too looking really good right near the highs here on a macro level on your daily. Trying to hold above this 228. I think, I guess if it were to pull back to this 228, 230, I think you try and buy that dip. Any price below this, some momentum will leave, but as long as it stays above here, and if we see higher prices in the market, this will help lead as well. Baidu, I don't know. It's trying to hold up. People really don't trust Chinese stocks these days. It broke this little trend here on the earnings. It's been acting a bit better. I would say as long as it stays above this area, you will see guys like me continue to look at it, and then your next buy price will be as it clears this flag. But this is not, I don't think you can trust it as much. As far as some of the disasters today, Coach, they did not give this any kind of pass here. But high-end retail really hasn't been the place to be. You think about all the problems in the world, you think about what's going on. This is broken down well before other things. Right here, it kind of broke this trend line with, this was a nice wide range bar. Then you had a head and shoulders top pattern right here as well. Left shoulder, head, right shoulder, continued lower, lower high. Then it broke another key area. Look, this is where it broke out from way back when. And a gap below it, didn't hold that, below the 200-day. So stocks typically hanging out below their 200 days. The rule to me is stock breaks below the 200-day. It has about 3 days or so to get back above where, then you think it's a trap. Because sometimes, if you didn't sell here or didn't sell here or didn't sell, sometimes they break it below to get the sellers out late, because a lot of people have stopped to the 200-day, but then it comes back above and it becomes more of a trap. But if you break below the 200-day and you stay below it and you don't even come back to getting back above it, institutions are just selling this thing and it wasn't a trap. It becomes a weak stock and you avoid it. So using that rule on a macro level, I know Google broke below its 200-day. I think when it was like 596, and we talked about if you're not committed to Google, you could sell it. So if you sold 596, not the biggest deal if you bought it back at 620. What's 25 points, in the scheme of, not having to sit through what was a pretty tumultuous time, or a pretty, I would say, emotional time, as it went down to that 560. So you saved yourself some points there. It all depends on how you go with it. But with this one, it just never reclaimed it. And again, if you take a look at the chart here, you will see, that this is, again, why we really, as intermediate trend traders or active traders, I would rather not take stocks into earnings, because this is what could happen. You can get crushed. So we trade it after the fact. So for every earnings report that you think you missed something, there are many that you saved yourself a lot of pain, and you could definitely maximize after the fact. I know Sperling and a lot of the traders, including me, we try and trade earnings after, or the stock after earnings, because we know the level. We know, like, even if you wanted to short, Coach, you really didn't have to be short into the number. You could have waited till after it, had the conviction, waited for it to break this level here in the chart, which was right here after hours. So once it broke below this pivot low of 53.26, that's when you could have got shorted. And I know, yeah, you missed out on a big move here, but you still made some money. Not so bad. Remember Facebook? Facebook, people weren't sure what their earnings were going to be like. I know I had a technical buy strategy on it about 3 weeks before earnings, but then what did it do? It broke 30. It got stopped out, so the pattern changed. And a lot of guys in my office wanted to be short Facebook, but they weren't going to short it into the number, just because if they shorted into the number, who knows? A lot of underwriters in there could have been something surprising, so they waited for after the earnings report, knowing in their head, oh, what's that pivot low? 25. 55, it gets below there after hours, that's when I short. And if you look at Facebook, they missed some, but they made some nice money after hours, when it broke below this area. It broke below this prior pivot, right? It broke below this area. So guys, after hours, I remember I actually made some money long at after hours, real briefly, but then once it started to break below 26 and 25.49, guys really laced into it, and it went as low as 22.28. So you made, you know, two points or so. That's a nice percentage in Facebook, not having to take it long or short into the report as an active market participant. And then what happened today? It got upgraded by Bernstein, went negative. So some guys shorted it when it went below yesterday's low, and then a lot of guys were talking about shorting it if it broke this prior pivot. I think I tweeted the 22.27, 22.28 went below it. You could have made yourself another 60 cents if you were shorted, and if you were long, if you said, okay, look at this green bar after earnings, maybe it's priced in and you went long it, which some people probably tried. Okay, because a lot of people are trapped in this thing. I know there's a lot of smart money in here that was involved from the private market saying, okay, I'm going to buy it at 32, the new issues at 38. Well, 6 months I'll be fine. Well, it's, you know, it's only 3 months and we're at 22 and change. And a lot of guys with a lot of money, with a lot of relationships on the street, bought it around 32, and they're feeling a little whatever, 10 points later. Anyway, so if you tried it here, your stop was right there. That's why we talk about pivots. Because if you break this pivot, there's no points of reference to look at. Look, there's nothing here. Do you see anything down here? I don't see anything down here. So what the hell are you trading against? Nothing. So guys looking to be long it on this day, you had to get out when it broke the pivot. Guys saying, you know what, this thing's breaking 20 bucks. The way it has to get there is getting and closing below 22.28. And now at this point, we'll figure it out. I know today I said, you know, guys were asking about Starbucks. I said, you know what? At this point in Starbucks, you probably could look to see if we get some type of reversal strategy, but we haven't seen it yet, right? Same way, yeah, you know, it's been technically somewhat broken ever since the highs here, you know, especially low. You know, I mean, here's your high, lower high. Look at this wide range bar right there showing no, you know, just no momentum to the upside. And then it broke below support, came back above, and then earnings were pretty horrendous, and they didn't price it in. So again, here, if you said, okay, look at this, it's a nice green bar, maybe it's priced in after earnings, I'm going to try some, and look at here, same type of thing as Facebook. You had to get out of the way once it broke 46.12, because again, who knows where it's going to go. So it closed on the lows. So tomorrow we'll see if it opens down into, you know, some bigger support. But again, this is below the 200 day. It's still broken, no signs yet of any kind of reversal. So we'll see what happens if it comes into this area, which is right around, what is this? It's around 45. So it still has some room. So, you know me, I'd rather wait for some type of red dog reversal. Trade through the low here of 45.09, put in some kind of reversal, and then see if we can get some kind of retracement. But for now, you see nothing like that. There's nothing telling you that Starbucks has yet to put in a reversal pattern. And today I was just like, you know what, if you've been short and you've been riding it down, here's a good spot to cover, considering you were at 62, now you're down to 45, just, or at least take some off. You know, LVS, I got stopped out of the remainder today because, again, I'm not sticking around. This was the high. Okay, this is when I remember it broke this uptrend. This was your get out of the way, or this is if you missed that at 56. So right here, it was worth a trade. So as far as LVS is concerned, it's still, if you're a swing trader and you're still trying to track it, you're still okay. It still hasn't broken below this low here. But for me, I was looking for some type of 3-day bounce back, and I put the strategy out there, and I said as soon as it makes, you know, closes below the previous day's low, I'm going to sell it, and it closed below 36.82, so I was stopped out at 36.70. And now I'll get out of the way, I'll see how it handles this low. But really, this was just an oversold tactical bounce trade, and you made a decent, I think we tweeted about buying it around 36, sold some 37.5 to 38, and then trailed some and get out of it right here. And we'll see if it can go sideways, and if it goes sideways, perhaps we could rebuy it above this 38.29. But overall, this group is just really weak. You know, Win also, just nothing to it. It's below the 200-day, it's rolling down. I guess it's almost kind of like I was talking about it in my virtual trade floor and on my radio, just like high-end retail. We're in an economy right now where people are trying to be cost conscious. Savers are trying to save. People are trying to, not be frivolous. So something like a Coach. I'm not saying it's not a great thing to buy your wife a Coach bag, but you don't need 7 of them. Maybe you have one, or go to Chinatown. They look just as good. Tiffany's. A lot of these high-end retailers where just it took time for it to figure out that people aren't going to be spending premium money. People have common sense. That's why this year it's been such a good year to be involved in Walmart or Target or Costco, some of those stocks where people have a value. And now we're going to have to see Walmart hit one of the targets at, what was it, 75. So now you need to see, is this going to pull back a little bit? You could always sell out along the way. At this point, still a lot of underlying strength, still above a lot of the moving averages. I wouldn't run away. Target was down $2. Came in there. I didn't like the real action here today, the way it gapped down. It could have been worse. So I would say just if you're not committed to Target, here is your new floor. Okay, this is your floor to trade against right here. This $60. Last time we had a tactical strategy there is when it traded above this area and you had a nice move. Okay, then it went to the highs and now it's getting a little choppy in here, so you just want to be a little bit protective. People asked me about Dunkin' Donuts in the past 2 weeks. Do I think it has a big future in the next few years? Yes, but even on a macro or intermediate level, when there are two levels it broke that it probably shouldn't have, that if you're not committed, you could have got out of the way and you could always revisit it when it claims certain moving averages. And if you look at Dunkin', you'll see right around here, it should really never have broke this support. Okay, when this was the last breakout, remember this breakout? A lot of guys bought it and made money, and it had somewhat of a false breakout, which I didn't like the fact that it came in so hard. Then you had a lower high, tried again. So really, we tweeted and said, if you're not committed to Dunkin' Donuts, it breaks below this 33 or so, you should get out of the way. And then also, this was another level. Remember earnings? It looked to be good, and they kind of sold it. So now it's hovering on the 200-day. So I would think that it's, you want to protect yourself sometimes. And it's had a nice move. The real strategic as a trader entry was right here. This is when we started talking about it with some kind of thesis saying what it could do over time. But when technical patterns break and if you're uncommitted, look what kind of, you can even match it up like this. Look at this uptrend it was in. Look at this level of support. It broke this uptrend, broke this support. Sell signals. You could always revisit. In a few years from now, it still could be above 40, but you want to make sure that's the plan. So at this point, when things change on an intermediate basis, you change with it. Great trade from here. Look what happened. Broke out, came back, retested. When it retested, it held, went up. Here, it broke out. If it was any good, it should have retested and held instead of breaking this level for what has been a pretty big decline since, plus with other stocks in that group. So there are ways to stay with trends if you're committed, and then if you're uncommitted, ways to stop yourself out. So these are just some more bigger term time frame type of scenarios. When trends somewhat change on an intermediate basis, you trade with it or you change with it because you never really know where these things are going to go, but things should act a certain way to continue. And when it broke that 33 and broke that uptrend that was put in since that low, shouldn't have happened. So you say, okay, I'm going to at least get out of a big tier size if you were in a big tier size. So on the positive side, I guess, Goldman Sachs today did show a bit of commitment to this upper level, so there's something to maybe hang your hat on a little bit. This was a pretty spirited move off the lows. It's now flagging right here. Maybe tomorrow, if the market does decide to turn up, this will be something to look at above 102.18. JP Morgan, continued to hold above this recent. Remember we talked about this yesterday. This breakout area. This was the downtrend that broke above. Now it's holding in here. I think it's got to really stay above this area to show some commitment, to consolidate this move off 33. Gold didn't have much traction today, but still hanging around. Still, it's like tossed in between two worlds here. It broke above this small trend line, but it's really below this recent resistance, and it really has not got going. I was showing you what needs to happen to squeeze this short, what needs to happen to change the character. And today you had somewhat of a down day, but if you look where it is in the scheme of things, it's not game over yet. It's just a matter of not ready. People aren't sure what's going to happen with Big Ben, and still it's really not something you should be so overly enamored with, because here's the high, lower high, that big directional move that's controlled it. It's perking up, but it shouldn't be the only thing you're looking at, and you shouldn't be over trading this, because if you are, you're definitely frustrated. I know I tried a few times in here to get this breakout trade, and it just hasn't happened. Silver, which was strong yesterday, also not game over, just didn't have quite the follow through yet, because why would it? People don't know exactly what Big Ben's going to do. So, let it stay above the moving averages, and then if it gets in motion, you could be a buyer of this above 27.40. So we shall see. Let's see what some of the ags are doing. Mosaic still hanging around in front of pretty major resistance. Okay, this is I would say a major level here, and it's not really pulling in. I wouldn't start chasing it yet. This was that red dog reversal. It's had a nice move there, but it is consolidating well. So as far as the ags are concerned, Mosaic still looks okay. What's Monsanto doing? Monsanto still in this trend, but I would be let's see what goes. Let's see this. You got to be a little careful, getting a little wishy-washy in here. Got to watch what corn prices are doing. It's been riding this 8-day moving average, and it's just starting to curl down. So I would be a bit careful. Here's the pivot for in motion, but at this point, make sure if you're long and you've been riding it, I would say put your high level stop at 84.20. In this type of market, I think it's very important to have low level stops and high level stops. High level stops to protect your profit. High level stops to see if you're trading something for continuation. If that upper flag breaks, you're not getting that continuation. So if you're playing something for momentum, when momentum leaves, you leave. And then obviously if you're trying to play something as a laggard bounce and it tries to go and fails, you get out of the way and you try again, like that Facebook or like even the Starbucks. So there are ways to tactically try and play a bounce with a calculated stop, and there are ways to be riding a stock that's working, that once it starts to falter, you loosen up on it here and then maybe even get out if that changes. So with all that said, still a lot to absorb tomorrow. Again, the Fed's statements will be released after 2 o'clock. We have ECB Thursday, jobs Friday. Market's still hanging around. We'll see what happens tomorrow, how we open, whether or not it's buyable. We'll look at the levels in the spiders. We'll look at the fib retracements. We'll see how the leaders are acting, and we'll decide whether or not it's worth your time to trade. But overall, still on a macro basis, guys keep asking me, gun to head, do you think S&P 1700 by 2015, or do you think S&P 1000? I'm still standing by S&P 1700. I still have a plan with my wife. Every month we're putting in, money every single month calculated, and I'm going to be 40. Yeah, I'm going to be 40 in September. And in my opinion, when I'm above 50, 55, 60, I don't care what Bill Gross says. I think that the money will have been working for me, and we'll have ourselves nice savings because it's calculated on a macro basis. Same thing with college education for my 4-year-old. So don't abandon a long-term equity thesis. That's one thesis. Your other thesis is finding the best stocks, trading them. Another thesis is being involved for cash flow, adding value or adding flows to your existing job by maneuvering the ranges. And at certain times, you just have to range trade. And I know it's hard, and we have to sell them when they look great and buy them when they look bad, and it's a frustrating time, but those times change. Bad times lead into good times, and frustrating times lead into better times. Just make sure during those times that you're not seeing it, you don't create yourself too big of a hole for when you're ready to climb out. It doesn't need to be that deep. Scott Redler, T3 Live, the recap. See you tomorrow morning at the call with Lindsey Bell. See you then. Have a good night.
Hello everybody, my name is Pete Renzulli, Chief Marketing Officer of T3Live.com. I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time.